Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's have a look on euro currency. Today in report we have taken a look at recent events and dig a bit the data that we've got and make our own conclusions on the job market in the United States, where actually everything is going and what we could expect in nearest 3-5 months on the euro currency in particular. So there are some interesting conclusions that we have made based on the recent statistics, because we have taken a look not only on recent data but also some secondary indicators and in some history of the payrolls report, some other data such as the continuing claims. So that's really bringing much better picture than separately the payrolls report, especially just recent report. And everything stands not as rosy as it seemed yesterday, so when the data had been released. Meantime, situation remains sophisticated. If we wouldn't have the Donald Trump uncertainty and his actually desire for different tweets, scandals, and so on, we would say that the current tendency in euro currency has good chances to continue. And the pause in the European Central Bank rate cut probably supports this. But not only this factor. A lot of multiple factors that stands in favor of the possible euro appreciation in the nearest few months. So on a fundamental background, we do not have any big changes. We suggest that the vital event might be the first conversation between the European Union and the United States when the Donald Trump delay in tariffs imposing will be over. It should happen in 9th of July. So that might be important. Would not expect any big changes from the Fed in June, so probably rate will remain the same. Hardly will get any changes there. So from that standpoint of view, currently we do not have any fundamental reasons to suggest that euro currency should start dropping. So the tendency should change. So from the fundamental background, we do not have any issues. Speaking about technical background, so on the higher time frames, as you can see, general action stands relatively slow. On the higher time frames, we do not have anything new. The one thing that we could say that the sale, the potential upside potential for the euro currency stands around 1550. This is because the monthly overbought stands in 50-50. So we can't say that in June we could get the action to the 170. Most probably, if we'll get any upward continuation, it will be some kind of the flirting with the top, washing rings of the top, or consolidation around the top. But hardly we will get 2 points higher action in the June. So this is first moment. On the weekly chart, there are two main scenarios that might be formed. We could get downside A, B, C, D. We could get straightforward upward action. We could get triangle here. There's lots of different patterns might be formed. And actually, I wouldn't exclude the chance for a reshaping of the butterfly. In this case, butterfly will keep the same target. But for instance, it might take the different shape. I will show you. So for instance, it might be something like this. So the right arm, right wing is yet to be formed, so it might be something like this. So so you got the idea. Although the target remains the same. Why this scenario is possible? Because if you take a look at the high time on different markets, especially on the ground and recent payrolls, you could see the big jump, for example, on 10-year bonds. Yield has jumped to the 4.5 again. It's a significant reversal. Same on the dollar index. Sharp upward action in agreement with the yields. So that obviously indirect pressure on the euro currency as well. And from that standpoint of view, we can't totally exclude the chance that we could get some slightly deeper retracement here. So that's definitely the points that I would be watching for. And that's the reason actually why we on Friday said and recommended to not hurry up to take a new long position. We said better to do nothing. So overall performance not really strong, payrolls stands ahead, better to wait for a starting of the week. So on lower time frames, on the fall time frame chart, let's take a look what we have. Here, existence of the divergence tells that market could drop below 1355 lows. So it might be drop below this area. And one of the possible scenarios, I see the possible head and shoulders pattern here, 127 head and shoulders. The drop below 1355 automatically will mean that market will drop to the 1320, to this conference area. So this is the minimum target that might be reached with the downside performance. Next level that might be reached in the shape of the possible butterfly, right here, it seems that 50% of the whole upward direction, and it's more typical for the butterflies, 5618. So it will be around either this natural support resistance line agrees with the 50% around 1260 or even 1230. That's major 618 support. For the bottom of the right arm, right wing for the butterfly is absolutely natural level. So this is kind of the maximum program for coming week. If we will get stronger downside performance, then probably we'll start watching for these levels. But first, let's focus what we could get on Monday. On Monday, as I said, it might be reaching of the 1355 and forming of this possible hand shoulders pattern. I will tell you even more if we take a look at the hourly chart. First of all, what I see, despite that market stands around the confluence that we have specified, we do not have any clear bullish signs here. Yes, some volatility, sideways action, natural stop around the confluence, but no signs of the reversal. Downside ABCD pattern, XOP target agrees with the 1351, so it confirms the divergence that we have on the fall time chart, and it stands in a perfect fit to potential neckline, right? So XOP stands actually, in fact, on a neckline of the potential pattern. And if we would calculate the downside ABCD target of the potential pattern, you come to 1320 target. Bingo. So this potential target of the butterfly, of the other hand shoulders, agrees with this confluence area. So that's the first trading setup that we will be watching for. Speaking generally, our task here is not very difficult. So what we should do in general, we should take a look at the shape of the pattern. If we would get either a reversal pattern or a continuation pattern, for instance, if we start getting the flag consolidation here, you could see that market will start moving higher, not completing the XOP, starting bouncing, or we start giving not the flag but a kind of the triangle performance, right? So something like this, so we could get something like this, so market will start bouncing here. That will stand in favor of the immediate upward continuation. If conversely we start getting the head and shoulders that we have mentioned, that in favor of deep retrace. That's the first task that we have to resolve. So in two words speaking, we still stand inside from the annual long position by far. Second, we're watching for a shape of the market on the hourly chart. Hand and shoulders, appearing hand and shoulders, in this case, scalp traders, if you trade on intraday charts, hourly chart, 15-minute chart, you could try to use this pattern for trading. Potential target will be 1320. Then we will have to make the next decision, whether it's suitable for taking the long position again or not, based on the trend on the daily chart. So that's actually the task for 1-2 sessions, maybe Monday, Tuesday, we will see. And then, depending on the market reaction, we will make the next step.